Sunday Scan live from Vegas. Welcome everyone. We're going to be talking about the super setups of the week, which usually Nate does not share, but this is going to be a special edition.
All right, guys, we got another Sunday Scan, this time from Vegas. It'll be the last of the short mobile kind of laptop videos, but I just wanted to make sure that I got it done. This weekend, obviously, was Traders for a Cause. We're in Las Vegas, and it was the biggest event we've ever done, the most successful event we've ever done. And, this year we put in the poker tournament. It was Cody's idea. He's been pushing it for about 5 years, and of course he won. The good part about it is that it forced everybody to kind of get out of their comfort zone. Normally when you might come to an event like this, you'll see, your old friends and kind of congregate and catch up, and, hour passes. You don't really meet anybody new. But with this poker tournament, you're kind of thrown into a table with 10, maybe new traders or old. And then, you kind of rotate. So it was a good way to kick off the event. We got a lot of positive feedback. We'll probably do it again next year. But overall, it's been a fantastic weekend. Let's see. What do I want to talk about today? We're still in the same type of market environment where, you can get super prepared, and it's meaningless by 9 a.m., 8 a.m., 9 a.m. just because, are we going to gap up 500 points? We're going to go down 500 points. We don't really know yet. So really the idea or the biggest benefit in this market, in my opinion, is to kind of just navigate through all these different charts and sort of find, where, if there's an opportunity, where you'd want to put your money. And, for me, I'm not always looking to just trade the SPY. Maybe I'd do some options or something like that here and there. But, as you guys know, as I have said many times, I'm still trading SPY options relatively small, just as I'm kind of, navigating and learning. But, instead of trading, say, SPY as an index, I kind of look at, what one would I like to trade out of the tech, and maybe it's not an Apple, but for me, it's an AMD, or what, in a situation where we see a Tesla have a big rebound, maybe Neo. So I usually gravitate towards Neo and AMD, as you've seen. Typically, I look for things that have either, steady downtrend without any really big reversal, just because I know when it does reverse, that one's going to have the best shot at having the biggest rebound. And that's where I want to focus. So we've got, Neo on scan tonight. Again, I'm just going to post the daily charts for you guys to kind of see, just because obviously I'm not at home, and it's a little bit harder to get the screen recording and the video and all that kind of stuff compiled on the road. So Neo for me is really just a reactive trade. So possibly something off of open. Typically, if there's going to be a reactive trade for me, it's because it's either got a big gap down or a big gap up. And the only way that I would actually trade that off the open is if a big gap up has some sort of parabolic move, or if a big gap down has some sort of washout that I can actually react to. So that is one thing there that I would trade. SQQQ is sort of back on radar. Personally, I usually avoid the ETFs in this sense. UVXY, I don't mind trading, but when the market starts to rebound and there's some sort of big opportunity, I want to be able to push as much size as I can. And with ETFs, I mean, it's just cash, right? They don't let you margin out on these ETFs. So it's something that I think that there definitely are trades in SQQQ, but usually it's not where I want to focus most of my attention. It's a good way to kind of trade what you're seeing in the market and not maybe have that outlier unwind on something that you might see, like an AMD that's maybe has a relative weak day compared to the rest of the sector. SQQQ or TQQQ allows you to kind of get that the full index. You're not going to have that outlier move one way or the other. It's more of a kind of a trend joining type name. So keep that in mind. But typically I might look at it for kind of identifying when something might turn. But obviously, if I think that all the tech is going to rebound, then I'd be looking to short SQQQ. Um, but as always, with ETFs, you don't want to jump in front of stuff. And at the end of the day, it's just a trading vehicle. Don't step in front and add because ETFs can go a lot further, a lot longer than you think. And obviously, lastly, like I said, AMD would be my choice for sort of the tech type bounce. I'm not going to probably trade an Apple or a Microsoft or anything like that, but I like the range on AMD, and yes, it's pulled back quite a bit, but don't forget how far it's come. So if the market stays heavy, just because it's gone 100 to 90, 80, 70, 60, doesn't mean it can't tip into the 50s. And it very well may. It could even go 40s. It sounds crazy, but we are in that sort of market where anything is possible, and you need to kind of protect your assets at this point. And if you're going to be sitting there trying to find a bottom on something, think back about the V-shaped reversal, the right side of the V. And on Friday, personally, I was trading AMD twice. I just started in to kind of get a feel for things, but looking back, there was really no reason to even attempt a rebound because not once did it have a higher low. So I tried AMD twice, and I lost both times. Neo I traded, that worked out well, but fortunately I had LGHL, which obviously had a nice 50% haircut. So hopefully that continues to go down as well, which brings us into the failed follow through momentum. Failed follow through momentum, obviously I look for some sort of push. It's always higher the better, because the higher it goes, the more people maybe that were short start to cover. It becomes a little bit more uncrowded, and then I'm looking to be proven right. So if this is just trending up, then clearly I'm wrong, and I'm not looking to trade that name. But if it proves me right in the sense that it kind of pushes, fails, and starts to break under whatever the prior support was, then that means I have a good read on it, and that's where I want to focus my attention. So LGHL is one of those liquidation plays like we talked about, and as I posted in the room just the day before this crack, it had the F1A, which basically means they're getting close to raising some money. So looks like they kind of did the walk up, the pump, the lot of big exchanges, built up the volume, got aggressive with their social kind of marketing of the name. But just like I had tweeted out, it's just a matter of time. That doesn't mean that you just step in front of it and it has to go down. That's obviously how you get hurt. But there was a lot of exchanges around the 2 level, a lot of volume. It was very thick. If you were trading it and you had shorted some, if you did try to cover on the offer, you saw like it didn't even budge, no matter within reason how much size you had. Which kind of to me tells me they're just trying to keep it liquid until they've done whatever they're going to do and exit it as much as they can before they obviously pull the bid. And then ABOS was another one that it's definitely one that I thought maybe would be a gap down type trade after the first day and then kind of to fade off. But to my surprise, it's back up 10, 11, and maybe that would have been one that I would have stopped if I was trading on Thursday or Friday. But for me, I want to watch that 10 over and under level. I'd love to see some sort of pop 20, 30, 40 cents up and then fail to follow through, maybe hit red and join that trend. But the worst thing you can do, in my opinion, is just sort of anticipate that it's going to crack, and you're going to either do one of two things. You're going to be getting chopped up, or you're just going to waste a lot of time with that sideways channel that we talk about. And I think that's important to revisit. Think about that channel, and the sooner that you can identify that, hey, this thing's been just stuck in this channel for 30 minutes, an hour, whatever. A lot of times you'll find that you just get stuck in that trade for 2, 3, 4 hours, and like we always talk about, your blinders go on. So just sooner you kind of identify that it's kind of doing a ping pong, bouncing back and forth between 2 levels. The sooner you should probably adjust your size so that you're not emotionally attached. Let it do what it's going to do. Let it prove to you which way it wants to go. And then, for me, I like to join that trend. The only thing that would adjust my thought in that situation is, the velocity at which maybe it hits the top end of the channel or the bottom end, right? So if it looks like it's going to jump and maybe break this channel, but all of a sudden a ton of volume goes off and it does not budge, then I'm going to probably be looking to position in and potentially anticipate, all right, maybe it's this time that it breaks down. Am I sizing in? No, I want to see the bottom end of the channel have that same sort of confirmation where it comes down to the bottom, retest to come back up, it stuffs, there's a big volume exchange, and then it stays heavy from there. That's what gives me, that conviction, or, proves to me that I'm right. FNGR, I talked to a couple traders. That one surprised a lot, I guess, on Friday. Again, I wasn't around. I wasn't really watching it, but had a nice little blow off, sat back. But, by mid-afternoon, it should have died. It should have stayed heavy. It should have broken down, but it didn't, and continued to head back up. So, in a situation like this, my goal would be like a 354 type open, something where it's 340, 350, 360, pushes off to 4, and then it starts to fail to follow through and unwind. The worst thing you can do is try to find the top on this. And the second worst thing that you can do is, when it does fail, when it does pull back, just slamming into that. I'd rather wait to see what it does right after the slam. And sometimes it's going to stay heavy and you wish that you had slammed in. But a lot of times what you'll notice is everybody's doing that slam in, starts to walk back up. And I want to be able to be confident and not emotionally attached if it's going to squeeze up a little bit, have this big exchange, and then fail off. I want to be able to scale into that trade, or at least put on that trade at that level, and not be covering in an emotional panic because I just slammed into it without much of a plan. So I see a lot of people do that. They get attached to this one red candle and think it's over, and at the end of the day, it's just a trap. ATXI is another one that on that first day, it had a nice steady move, a lot of circuit halt, and then shorts got paid. It was a really nice unwind. I made a nice trade after it all, kind of gave up, and it closed relatively weak. And then it ended up holding the next 2 days. So, it should have stayed heavy. It should have died. And I think this is a case where, because of the tools that we have now, everybody knows that they're going to raise at some point soon. And so it gives conviction to hold on the short side. Plus, they've got a padding or two. But then all of a sudden, the volume's gone and the trend kind of, grinds up. And, where are they at? And so now we have Friday, which is, sort of the T+2 day, the cover day. And I think that Monday is going to, tell a lot about what's going to happen from here. So if it were to gap up and go 11, 12, I'd be looking for a fail to fall through momentum to join. But if it just kind of consolidates around 10, I'm going to be hands off. I think a lot of people will try to anticipate this. The key is set price alerts. Set price alerts for 970, 950, 930, 920. Just so that when everybody else forgets about it, you don't. And a lot of times you'll, especially for me, I'll be in the chat and I'll just be looking at something else. All of a sudden a price alert hits from something, I set 3 weeks ago, and I'm like, oh yeah, that's right. I wanted to fade that if it broke this key line. Everybody else has forgotten about it. It's no longer crowded. And, you end up getting a good trade sort of under the radar. Because, at the end of the day, most of these things just are hanging around because everybody's on the same side. So they got to churn and work through everybody that is on the same side. And once they do, you see it fade off. Last but not least on the failed fall through momentum is ILAG. This was one of those socially driven pumps, just like the first time. And, sort of a target of 350, hit 349 and, unwound from there. So I think probably a lot of people were trying to fade this one. And I think that is probably off a lot of people's radars. So I would keep an eye on it. If it goes up, 20, 30 cents, then I'm interested in potentially fading it back. Obviously, if it holds trend, cautious. But I do think that you'll see this start to fade back towards the lows. And then moving on to the continuation side of things, Sober, SOBR, nice little trap. I think a lot of people got caught on this one. And so I'd basically watch. If this starts to base first those 250s, you never know. This kind of reminds me of TBLT. You can go back and look at TBLT within the last 3-4 months where, it's sort of a raise situation and they filed an offering and then all of a sudden, guess what? It triples. Sometimes the most obvious trades are the ones that hang around, doing what you wouldn't expect because everybody's positioned for the same thing. It's obvious and they know that. And so you just got to wait for that kind of momentum to shift. If it were to exhaust out and fail at threes, I would completely throw away this idea. So just keep that in mind. Remember, these can be perfect setups, but a lot of times they could just be liquidity traps where they kind of go to those key levels. You see all the volume come through, and maybe that's the exchange where they exit to the shorts that are nervous, and then they walk. So likewise on a few of these other ones that I'll get to next. It's always important. Yes, the setup's there, but if something happens in the tape and there's a big shift in how it's trading, you can't force your original thesis to play out. Other than that, ALLK, this one's been on Sunday video for quite some time, and I have not got long yet, but it's been pretty steadily trending up. There's been a couple days that I think, if you were long, you'd question taking this trade or holding it, but it kind of keeps on making those highs. So this is one of those where, in my opinion, if you are trading it and you're trying to force a trade or trade it, trying to trade size, I think you're going to get chopped up. But maybe a smaller trade, especially if 650 starts to base. The only thing I would be cautious of is if 650 has some sort of big volume and then it starts to fail from there. But if we start to base over 650, there's potential that we start to have that next trend. And then the last two were SNTI and BBAI. Both should kind of look familiar with the volume. Huge volume bars 2 days ago. Then the prior day, it's very minimal. If maybe it's 5% or 10% of the day before, but it held trend. So, just because it's a liquidity trap does not mean it has to go, but it has the potential, right? And so, trading is all about kind of identifying what trades have potential to do X. And, if SNTI starts to base and continue to hold trend over 220s and it starts to speed up over 250s, we've got a great opportunity there. The risk is if it stuffs at those prior levels of 225 into 250, there's a big volume exchange and then it gets heavy. You don't want to force your thesis to play out. Otherwise, you're going to be on the wrong side of the trade. And last but not least, like I said, BBAI, same deal. Nothing I'm excited about, but we had almost 60 million volume, and then maybe 5% of that traded. And so if it continues to hold and it starts to move through, say 160, 170s, and so on and so forth, then there could be a lot of covers that need to come through. And if the liquidity is not there, obviously it's going to force the price up. So we'll see what happens with that. But that's it. So quick scan today. Actually, I guess it's about 18 minutes, but hopefully you guys got some takeaways from it. Learned a lot this weekend, met a lot of great people. We had probably more than 50% new people on stage this year, which was phenomenal. A lot of good people. And so far, everybody's had a good time. So anyway, I will see you guys in the room on Tuesday. I might pop in here and there on Monday, but unlikely. I'm leaving here in the morning, and I'll be back, and then business as usual on Tuesday. So that's it, and trade well tomorrow.